everyone understands that housing and real estate is really oriented around supply and demand. Demand is obviously a big portion of that is around population growth. But it appears that the US is on a steady stream of actually shrinking. Lance Lambert and Resi Club has put out an article recently that was asked about a dozen times by my followers. So why not just go right to the source? We've got Lance Lambert here to talk about the US population shrinking over the next 80 years. Lance, great article. A lot of people ask me about it.
Zuber, thank you for having me. If it's fine, I'm just going to go ahead and share my screen and jump right into it.
Please.
And so what it is, it's less of actually outright shrinking and deceleration, but it's a faster deceleration than it had been expected. And so back in 2008, census expected there to be 351 million people in the US by 2022. In 2012, they were like, you know what? We're 10 million too high, knock that down to 341 million. 5 years later, 2017, they said, you know what? Take one more off. It's 340 by 2022.
Okay.
And then when 2022 rolled around, it was 333 million people. And so in 2022, it's fair to say, and it's true based on these census numbers, estimates, that the US and the housing market had 18 million fewer people than had been expected 15 years, 16 years earlier.
Interesting.
And
Okay.
the reason for it is, in 3/4 of the math here, is because of US fertility rates decelerating faster than expected. So births have declined faster than expected. By 2038, the US Census Bureau expects deaths in the US to start exceeding native births, and that all of the population growth from 2038 to 2080 will come via migration. And then by 2001, census expects the US total population to begin declining. So,
wow.
So it goes, deaths start to exceed births 2038, then total pop by 2080. And it's really fascinating to actually take these four forecasts, and they only do this exercise every 5 or 6 years, and to just plot them next to each other. And here's the 2008 forecast. Here's the 2012, the 2017, and then boom, the 2038 really decelerated off of that trajectory.
Yeah.
So right now we are around here where we are off that curve, but it's still been fairly fast. So for census to be right, they really need this deceleration the next 15 years in terms of births really declining closer to deaths. And in 2008, census had expected by 2050, there would be 439 million Americans. Wow. 2012, they said 400 million. 2017, they said 238 million, or 338.
389.
389, yes. Yeah, the numbers, I'm seeing them and they're not coming out of my mouth right. 61. So the difference there, what is that? Like about 70 million off? Revised.
Yeah, 78 million.
Yeah.
Wow.
In a 15-year time period. And so the author of this, who looked at this before I did, said it's hard to overstate the magnitude of this change. After all, the story of rising population has been the same throughout the careers of everyone working, and he's talking about the housing sector today, but the story is changing surely if slowly, and with this shift, a new set of questions arises. Now, there's a few things I want to get to, which is one, it is possible, based on the John Burns research and consulting estimate, that last year was the highest amount of population growth for 1 year in US history. It's also possible that we're 18 million below where census had expected us to be 18 years ago. And that 1 year jump that occurred last year, according to John Burns, which the census numbers are actually 1 million below John Burns. So it's kind of troubling that they're, the private estimates and then the public estimates are so different. But really that whole jump is led by pretty much illegal immigration was a huge jump over the past 12, 14, 18 months has been pretty high. So it's a question of, one, is that jump as big as is reported? And then two, is that type of migration increase sustainable? Because if that's sustainable, then this math will need to be changed by census. If
Mhm.
not, if it's just a temporary influx into the country, then it probably doesn't change this too much.
No, I agree with all that. I think the other thing that warrants inspection here is millennials and Gen Z, specifically millennials in this example, they're trending to date 6 months, or I'm sorry, 6 years behind Gen X and baby boomers with kind of major life events, which
Mhm.
obviously includes marriage and kids. So what we might be seeing here, again, just might be, is the fertility rate. It could reverse. It could go up, you know, because, millennials, again, are maybe having kids later, I guess.
So what occurred in the US is that there was a really big drop in fertility rates around the time of birth control coming out,
Hmm.
abortions becoming illegal in more states, and then Roe v. Wade. And so you see during the 50s and 60s, or really 60s into the 70s, that real big decline in
Yep.
fertility rates. It smacked into some type of bottom, and then it actually climbed for a little bit into the
Mm.
80s, into the 90s. And then right around when the economy went to hell, whatever happened here, we started to decline again in fertility rates.
Well,
Now,
that if you match that out with millennials, that's the millennials. They're not carrying the water of births, and again, I think that's because they're delayed 6 years. So that little uptick you see there right before 2020, I don't know. Yeah, right there. Yeah, it seems like
yeah,
a little uptick.
it'll be interesting to see. I think one thing that is true, though, is that across the developed world, we've seen
Hmm.
a decline in these fertility rates.
Correct.
There hasn't been much that's reversed them, even in the countries that have done things like, more childcare assistance and different
Hmm.
things. Hasn't exactly worked. And it does look like some type of cultural shift, and just people are doing things much later.
Hmm.
Uh, staying in school longer, more likely
Yep.
to get good education, entering the workforce a little later. They are, getting married later, buying a house later, having kids later, everything just a
Yeah.
little later. So I think things here that could change fertility rates, maybe like innovation, the stuff that's in the fertility care type stuff, especially as
Hmm.
people delay.
Yeah.
Because some of the reason that the fertility rate has fallen is because people make those delays, and
Yeah.
then life
Then they
doesn't
can't.
cooperate
Yep.
with them. And yeah. And I'm
Exactly.
kind of getting to that age now where I'm starting to see that in friend groups.
Yep.
Uh, yeah, and so switching gears off of the fertility rates, if we take a step back from the big trend and look at what's just happening now,
Oh,
what
look
we've
at this.
seen is still
Wow.
population growth in Florida, the Texas, the Tennessees, the Georgias, the Carolinas, and really that Mountain West is, this right here, all the
Yeah.
way from the top of Montana through Utah, Idaho, Nevada, Arizona, still strong. This patch of Texas, and then the Southeast. And
Look
then
at
you just,
that.
a lot of the Northeast and Midwest is muted, and California, of course.
Yep.
Um, and then I think some of this red is probably just kind of coming off of that natural, that nat the natural gas boom that we saw in
Yep.
the last. I think that's probably why there's some red there, because
Yeah.
those of the country kind of really benefited from that.
That's great insight. I love this map. I love this visual because again, even if the country's shrinking by 20 million, it's not spread evenly, right? There's going to be some winners and losers in that.
You know what the irony is here? Is
Mm.
that the places that are green have been the places that have actually seen their housing markets cool more than the
Mhm.
places. And some of that is because those places, they just saw just enough pullback of migration from the pandemic
Mm.
wave. It's still happening, but just, they've kind of come off that real big boom in. And that
Mhm.
boom was so hard hit in those places. A lot of that California money, a lot of that New York money went in,
Mhm.
right? The
Yeah.
fundamentals got a little too high for locals. And then
Yeah.
the second thing, and this is probably the most important, is that all of those markets have new construction. And so the
Mm,
Northeast and Midwest, we don't have that new construction. And so
nope.
when builders went and met the market and did the affordability adjustments, they got an advantage over the resale market, and that kind of disadvantaged them a bit. And so I think that's why we've seen a little more softness in some of these pockets of the country, just because they have that new construction competition and the builders are really savvy and it's a commodity to them. And they've just done some of those affordability improvements to meet the market.
Yeah, that's amazing. Any other thoughts that you want to show around this population discussion?
Um, the last thing to note is just if you like this type of content and you want, like, this is a free story I sent out this week. You could go to resiclub.com, put in your email. I do, several free articles a week. I also have my premium, but even if you just are free, I'm going to still give you a lot of content. You're going to get a
Oh,
lot of
yeah.
good.
Folks, if you watch my daily financial news, you know that I quote Resi Club almost every day. The data is there. If you happen to get the premium, the data you can get down to your buy box is legendary. But even the free articles are worth talking about, worth understanding. Lots of economics, lots of data across the board. Lance, you are amazing. Thank you for coming here each week. And also,
I share one more
thank,
chart just because it's fun.
I love it.
Okay. This is inflation by decade.
Oh,
I
I
don't
like
did
this
we
one.
go through this one yet? I just
No, we
like
haven't. I
it's so
love it.
cool. Um, and so here you see our decade. We got that overheating right out of the gate, and we're already over the entire inflation of the 2010s. And I'm pretty sure I ran the numbers. Even if we kind of decelerate down to the Fed's target, I'm
Yeah,
pretty sure this decade will beat the 90s and 2010s.
I agree with you.
We can
I think
only
that's
have
very likely.
and then here's with the 70s and 80s added on.
Woo!
Uh, the wild thing is we actually, with the pandemic overheating, we
Yeah.
were actually on pace for the first 3 years of the decade above the 70 start. And then since the Fed has really jacked up rates, we've decelerated under it now.
Mm.
But the one that doesn't get talked about as much is even though we did 18% mortgage rates and all of that, look at the 80s, still
Yeah.
so high, about 60% inflation for the decade.
Yeah.
And
No,
then,
it's pretty wild.
and then this chart is every decade since the 50s.
Hmm.
And it shows where we are at the same point. So through 51 months, we're at 20.7 inflation, only beat out by the 70s and 80s. And I think really what this chart speaks to is the thing you talk about all the time, which is, inflation's a feature, right?
It is. Inflation's a feature, not a bug. Understand it, invest like it. It can be your friend if you use it appropriately, or it could be your enemy because inflation can run you over. It's a regressive tax for sure.
Yeah, I thought this chart kind of did a good job of showing really quick what you talk about all the time, and you
Yeah.
see, every decade it's moving up. Sometimes a little slower than others, but it's moving in one direction.
Look at that. The 70s had 100% inflation. That
Yeah,
is
and
wild.
the interesting thing is the 50s and 60s, which I kind of thought maybe they were higher. I didn't realize that they were kind of closer to what we have been used to with
Yeah.
90s, 2000s. And then the 70s and that 80s one, just,
Just rip. Right.
yeah. And that's why, the Fed has an important job.
Hmm.
Um, and, it's an important job. And, trying to, cut rates a quarter sooner or 2 quarters sooner,
Yeah.
they have an important mandate.
Yeah. We don't
Uh,
want to see it reaccelerate. That's for damn sure. That
Stable
brings the
price.
80s in. Very cool. Well, Lance, you're amazing. Also, you are a contributor to Zuber Letter. Folks, if you haven't read Zuber Letter, go to zuberletter.com. We have a very spicy article coming out this week that you have to get. Go to zuberletter.com, completely free. Just give us your email. Lance, thank you so much.
Thank you.